Morning. Hope everyone is well. It's the 15th of January, 2026. So I did not actually make a video yesterday. Yes, I know that. But I decided to do something this morning, or this afternoon, or morning actually, 15 minutes to afternoon. I haven't done I haven't done this before, but you never know. I might make it something that becomes a major occurrence. But okay, so there's something I saw, and I'm just trying to see where is it again. I think I'm streaming right now. I'm doing a market review. So, I mean, I wanted to go through the markets. I want to make it very short, really, and we'll see. You might like it, you might not like it, but hey, I do it for me, I guess. Okay, it's not. Let's just share my I'm just going to share my screen quickly. Um, let's have a look. Try and keep the background white before I blast it onto you or beam it to you. So please bear with me. Solid background, make it all white. Impressive. Okay. So I'm going to share this and then hope it makes sense to somebody. There you go. So this is the markets, of course. Obviously, what else could it be? This is the cues. Um, there's something I tend to throw in here. Just let's see, performance. Just throw it at the bottom. Look at that. So if you look at them, okay, before we talk about that, let's see. So this is the markets. And what do we have here? That's on a monthly, by the way. Let me do it on a daily. Okay. So we have markets back to all-time highs. It's quite interesting. One of my mentors usually says, because I didn't do a video yesterday, and somebody called me and said, "Oh, I didn't see your video yesterday. Are you okay?" I said, "Yeah, I'm okay. I wasn't feeling very well." If you look at the video I did 2 days ago. So he said, "Oh, are you okay?" I said, "Yeah, I'm okay. I just wasn't feeling very well." Now that I've done this video, sorry, so I said my mentor usually would say, "How do you know if you're doing the right thing?" And it says, will they miss you when you're gone or if you're not there? And I said, oh, it looks like somebody is watching it. Okay, then that's fine. So like I said, I'm not doing it for the views. So I'm actually happy at least one person is watching it, which is good. Okay, so let's look at the cues. That's the cues, and this is the performance year to date, just barely 1%. At the last 12 months, it delivered 23%. The last 5 years, it's, been a five bagger. Okay, now, what do we have right here? We are back all-time high. Okay. We were at all-time high in, I don't know what date that is, but I think because I've covered it. Yeah. Okay. There you go. So we were all-time high. Let me use a ruler. That would be nice. We went all-time high last November. Again, about between December and January, back inching all-time high. Again, back inching all-time high. But each time, what happens? It gets a bit lower. Okay. So again, I'm not saying anything. This is just an analysis for me. Okay. Does it look like the market's getting a bit tired? I don't know. I'm just telling you what I can see. That's number one. Okay. So this is just a way to gauge the market. So you can see all-time highs, but the peaks is pivot. The pivots kind of gets weaker and weaker and weaker. I mean, you might say, yeah, that's a bit scam because look, this is not as high as that. Well, you're not wrong. Again, like I said, it's just my analysis. Okay. So that's it right there. Um, and I can see from the peak to peak to peak. It's not exactly as high, but if you draw the two lines, that's number one. So again, I'm not calling for it's not a bearish post at all. I'll tell you why I'm doing it in a minute. So that's number one. Number two, let's look at Apple. So you can see Apple right there. If you pick it up, I mean, look at Apple, all-time high, got higher, but kind of got weaker. and then it's trying to bounce around this point. I think it's still going to get a bit lower. But look at Apple, the last 1 month, it's down 6%. Year to date, 4%. Okay, I'm looking at the leaders here. Let's look at NVIDIA. NVIDIA, how is that doing? Um, NVIDIA, again, all-time high, but year to date, it's less than 1%. Okay. And 5 years, it's 1,300%. Impressive. Why not? We're looking at the Magnificent Seven, of course. Tesla, how's Tesla doing? Tesla, again, year to date, performance. Year to date, where are we? Less than 1%. 5 years, 60%. Impressive as well. Again, look at that. Look at that. Again, I'm not telling you anything. I'm not putting words in your mouth. I'm just showing you what I can see. Now, sorry, hold on. Just quickly trying to beam this to some audience who are watching it. Goodness gracious me, what's going on? There you go. Okay. So as I was saying, so not putting ideas in your mouth, just telling you or showing you what I can see. All right. Now the next thing is so I've talked about Tesla, talked about Nvidia, talked about Apple, Magnificent Seven. What else? Google. Has been impressive. So that's probably an outlier. But look at Google. Google's been impressive, extremely blowing everything out of the roof. And all-time high, where are we? Year to date, 6%, 5 years to 85%. Impressive. Why not? But another one, I don't really want to count BRK because BRK is like an anti-tech, really. Berkshire. I don't know why that one is coming up. Berkshire. There's Berkshire in America, there's Berkshire in Reading in the UK. But anyway, BRK down from its all-time highs. Yes, of course, there's a catalyst, of there's a reason there. Warren Buffett retired. There you go. Year to date, down. 5 years, 112%. Again, impressive long term. Yeah, two lessons that you might say, yeah, the lesson is to what? Invest for long term. Why not? Okay. Now, where are we? Um, Now okay, of course, we do also have Palantir, PLCR. Palantir, again, that says something. You can see 2 legs in, 2 legs out, 2 legs in, 2 legs out. Year to date, just about 1%. I mean, of course, it's only been 2 weeks into the year. And then again, 5 years, 619. Now, what is the key thing that's making the major headline? Oh, didn't talk about Netflix, NFLX. Let's look at Netflix. It's quite interesting. Whatever ticker you type, there's always something there. Netflix. Again, year to date. Year to date, -5. 5 years, about 79%. So, all these things are saying something. We kind of have a slow start. We didn't talk about the January effects anyway, which is taking place. But so overall, they're not, they're all saying the same thing. They're not saying much, but they're saying a lot if you can interpret, but they're all saying the same thing. And Amazon, I think has been impressive. Year to date is about 6.7%, 7%, let's say, but 5 years, 57. Now, why am I going through all these things? I'm going through them for a reason. And we said the queues are all-time high. The all-time high has been a bit weak. Okay. It's quite interesting actually because the queues has got 2% more than Tesla, Amazon, sorry, apart from Amazon and Google, the queues actually been doing a lot better than Apple, Nvidia, Tesla, even. I don't even know. I think AMD did blast off at some point as well. It did very well. Majestic. Magnificent. But year to date is 3%. It's down. So there's a lot of lessons right here. And, so if you look at IWM, well, the key lesson is I learned something. IWM year to date is 6%. So what you need to understand is we talk about the market breadth, okay, or the depth. The market breadth. Some things are moving and they contribute to a lot of them. Just like we know S&P, I think a handful, about 9 or 10, contributes to 30% of the entire market. Yesterday is quite interesting actually. We have about 503 stocks in S&P, about 285. We're moving up. But guess what? The market still went down. So because the major movers were not moving. And I learned something as well. And I don't want to post my entire portfolio, but I'm going to post something which I'm going to share something. So you're going to have to bear with me because I'm not going to share it in its full glory. Okay. Well, let's see if I can share this image. Um, where is it? I'm not. Okay. Let's see if I can crop. I'm not going to crop it out, but I'm gonna paint it because I'm gonna say this for good measure. Okay. Do you know what? I might as well crop it out. So this is just for me. Okay. So it's not for anyone else. It's just for me. Um, but it told me I could crop. There you go. So there you go. So this is what I want to share. And like I said again, this is for me, and it probably applies to a lot of people out there. This is my portfolio this year. And this is something I learned. And it says there are so many ways to make money. There's only one way to lose or to keep it. Okay? This is my year-to-date performance, 40%. I have not bought one stock this year. So sometimes when your winners are running, you've got to let them run. Let your winners win. What about the losers? Course, you cut the losers short. If you're a long-term investor, you keep them. So if you are up by a lot, I've been seeing, I think the same thing happened last year. There were lots of people who were sharing their yet-to-day performance. But when the market went down, it all went quiet. So, like I said again, there's so many ways to make money. There's only one way to lose it. So for me personally, I put something in the group yesterday and I said, I'm closing out for the year, meaning you know, I'm taking my profit. I'm staying away from the market. Look, we die for 20% performance annually. And if I'm able to get 40% return in 15 days without having to push a button, I think I've achieved my aim, my goal. So what does that mean? I'm leaving the market. Thank you until I see the reasons come out. Yes, this is a blow off top. Of course, you follow the trend. I'm still trading, but when I say I'm leaving, I'm having very, very, very minimal exposure in the market. I'm not leaving a lot there because at the moment, I mean, you need to understand market goes up, it goes down, and it goes sideways. This market's been extremely headline driven. It's been working, but sometimes market goes down. Someone says, "Oh, why is market down?" And I say, market doesn't need any reason to go down. Remember, I was talking about a few things. Now, look at Microsoft. I was showing you a few things. I forgot I did not show Microsoft. Somebody will say, you cleverly left that out. Look at Microsoft. Again, look at that year to date lower. So everything is down apart from what? Google and what's the other one? Google and Amazon, actually. Tesla yesterday has been poor. Microsoft yesterday has been poor. We're talking Magnificent Seven, literally all of them. Nvidia has been poor. AMD has been poor. It's been poor. So of course, long term works. Number one, some people look at this. Amazon told you. Microsoft told you. And somebody said this down. I still expect this thing to go right as close as $400 as possible. If you're patient, you will get it there. Again, not financial advice. This is just my personal opinion. So, leaving the market, taking some profits, because very minimal exposure. That's the way you keep money. You know, there's so many ways to make money. There's only very few, sorry, there's only many ways to make money. One way to lose money. Okay, and that's it. So that's what I'm doing. Now, let me look at a few other things. I think everyone has got carried away by everyone is talking silver, 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 but they didn't look at different things. Now, let's look at silver. Everyone is screaming silver. Look at silver, all-time high. It pushed 93.5 yesterday. What does that tell us again? I'm always thinking, what does it tell me? And it told me a lot of things. Because if you look at silver, it says 244% 5-year performance, but that's wrong. Many people don't, well, it's not wrong. Many people don't realize that 12 months is literally, he did most of it in 12 months. Okay, look, 6-month performance. We have a very uncertain, we live in uncertain times right now. A tweet could change everything. Look at silver right there, 2020. It was literally $13. And now, sorry, 7x since that time in 6 years. So, yes, long-term mindset thinking is what you need to have. If you don't have that, you're not going to win in this market. Number one. Number two, the dollar's been heavily, heavily losing. I think the dollar must have lost about 10% this year alone. 10%. So, you could see, and I put it here, and I said something about the dollar's been on a 15-year support. So, you've got to be careful. If you think the market's always going to keep going, you know, US was going to invade Iran. That's what was showing on Poly Market. That was the gist. It didn't happen. I think the president changed his mind yesterday. Look at what happened. Silver crushed 4% minute, 1 minute. And then again, look at oil, WTI. Oil was inching up, gearing for an attack. But we saw what happened yesterday straight away. People have been buying oil. I mean, I was saying oil is going to do a 62.5, but it went 62.2. There you go. I said it's going to make a $2 move. So let me see where it dropped actually. Yeah, 62.117. So you can see, and you know, it's quite funny because in this market, you make money, you lose money, but you've got to be careful, understand the trend. So again, we live in uncertain times. Oil, again, the latest president said, I think it likes oil at $53 a barrel. Fine, the oil makers still want to make money and is making all deals to make this possible. The metals are running. Now, people are losing sight of what other stocks they should, or what other areas they should be looking at. Now, let's look at a few performance year to date. Some companies or sectors, how they have performed. Look at uranium. Uranium has done, this from Stock Charts, by the way. Uranium has done 26%. Let me just see if I can snip it here, actually. So I'm looking at some industries and I'm looking at the performance. And I promise you, this is not your usual, because the gist in 2026 has been oil, sorry, it's been gold, silver, and that's about it. But look at what we have, even though I think the first one is wrong. So, so I'm going to say disregard the first one, but we have, yeah, so disregard this right here. It's definitely not true. It must have accommodated for some reverse splits, whatever. But look at what else we have. We do have right here sorry, hold on a second. We have uranium, 26%. Copper, back all-time high. Aluminium, if you are in that year where commodities and hard commodities are the ones making all-time high, that's not great. AI has been being backpedaled now. Semiconductor equipment, that's good because I did say, personally, I think this year is going to be the year where the market moves from soft to hard, but I was not betting on hard commodities. Okay. Chemicals was one I mentioned a few days ago in the group. And how's that performed? We're going to have a look. So, oil and gas equipment, remember Venezuela, that's going to have a few contracts in there. It's going to take a while for them to go. And the fact that oil is down does not mean they stop pumping oil. Not really. It drives this engine, this mechanical engine. So we've got chemicals, we've got which is going to move, we've got oil and gas, which is going to move. Sorry, chemicals is, I mean, chemicals is just an area I'm looking at really. I'm not looking at coal for some reason, but look at that, 20%. And this is a year-to-date performance. So we are missing. If you keep focusing on the same ones, yes, long term, maybe the same ones have been winning, but you need to understand this market changes. And that's what you need to understand. So personally, for me, I made a post in the group, well, now group anyway, and I said, pay attention to the chemicals. They're not sexy, but they're moving. But what do we have? We have Dow since then, about 7% or 6.5% yesterday. We have if okay, what else do we have? Let's just see. We have LYB. LYB made a mega move as well. Was of course invested in Dow. LYB, we had a 7% move as well. We have the other one, CBT. CBT. And you could tell all this by look at the year-to-date performance. That's a 10%. Again, LYB, 20%. Dow, there you go, 20%. So a lot of people tend to say, oh, I'm a trend follower, I'm a trend follower. But yes, it's all well and good being a trend follower, but are you in the right sector? If you're in the wrong sector, you're just gonna follow some trend to the doom. And that's all it is. Now, the last one was Bitcoin. Bitcoin kind of picked up after a very dull start to the year. But look at that. An aggressive 7% immediately after it's been very poor. Look at an aggressive 7%, 9%, I'll probably say, this year already. And therefore, we talked about CLSK, Cleans Park, which is going to follow suit. And straight away, I think the last week or so, 12%, 31% year-to-date performance. Talked about BTBT. Again, what happens there? 25% year to date. So sometimes you just need to be able to know what sector to follow and how to pick these things. You don't just log onto the computer, what's moving, let's go. That's not how to trade, guys. So I just thought I should drop a few comments in here this morning. We even talked about, I remember, I'm just looking at my notes, BMNR. Look at that, 20%, even though it's been paltry for a while. But yeah, so you need to get into these things at certain times. So what do we have? I mean, Oracle made the news about bond, being sued by the bond buyers, etc. But all I'm saying is learn to follow and listen to the market. Look at BMNR, 431% in the last 12 months. I mean, sorry. Okay. So be able to listen to the market, be able to follow the market and understand where the money is flowing. That's all I'm trying to say. Sorry if it was a bit long and winded, but I'm not feeling the greatest. But I thought I should put something out there for whoever's listening, and I hope it helps someone. On that note, guys, you take care and have a good rest of the day.